Hi everyone, let's go over my low time frame and medium time frame preferred and alternative Elliott Wave scenarios on Bitcoin, starting with the low time frame preferred scenario, where we are looking at this structure to the downside in a 5-wave move in a 1, 2, 3, 4, 5-wave construction, after which we now expect a 3-wave move towards the upside for then a wave B, where an interesting target area for wave B is this white box over here between 27.7k and 28.2k, mainly because of the two target boxes that I have inside of that area. The first one, the first resistance between 27.7 and 27.8k, and the second resistance is between 28k and 28.2k, for then eventually expecting another 5-wave move towards the downside and then creating a potential zigzag, which is a 5-3-5-wave move to the downside, or potentially this is a wave 1, 2 and then a bigger 3 towards the downside. However, if we are looking at a potential ABC, which then is a 5-3-5-wave move, what I think is very interesting also in relationship to the medium time frame scenario that I will show you in a second, is that the most common target area for a wave C is between the 1 and the 1.236, which is between 26k and 25.5k, and it also includes the double bottom that we have of this range over here. So low number 1, low number 2 at about 25.8k, which I think is a very interesting area for potentially an ABC and then a reversal towards the upside, after which we go to the medium time frame count in a second and show you what might happen next. If we then go very locally and have a look at what's been going on over here, then from the low, price created a movement towards the upside over here, where I think an interesting area is that key level at about 27.4k, because this is a previous high, so there might be some liquidity resting above. We also have the high over here, so one could say, hey, we might have a little bit of a double top going on for maybe then a liquidity grab, and then eventually a movement to the downside, because a wave B has to be a 3-wave structure. So potentially this then being the first structure, second structure towards the daily for interesting support, and then a third structure towards the upside where we then enter this white box over here. However, if price is going to go to this level over here, 27.4k, but not eventually move towards the downside, then of course the next level of interest for me is going to be hitting this target box as then the first structure of a wave B. So then this is going to be the first wave of a wave B, preferably, followed then by a second structure, third structure, which is then likely to go higher to the upper target box, and then from there move towards the downside. So that's quite interesting. Now, as mentioned, we have a daily at the moment at 26.8k, which is nice. And also if I take a Fibonacci from the low of A to then maybe the high of wave B, which is then about that key level, if we get a bit of a wick and then a move to the downside, what you can see is that also the golden pocket is right on top of the daily for some extra confluence. So actually I would like it if price is going to find a little bit higher, a bit more price action to the upside, and then potentially having some sort of a swing failure setup, meaning price wicks above the high, but then closes the candle below the key level, below this high over here, for then a move towards the downside. And that's also called a swing failure pattern, where up, down, close, and then eventually move down, where if one trades swing failure patterns, the moment the candle closes below the key level, entry, stop loss above the high over here, and then looking for downside. Of course, this is very hypothetical because we don't even know if price is going to go up here, but it's at least a little bit of a plan, right? But you need to have your own plan, no financial advice, have your own entry requirements and all that good stuff. Then at the downside, as mentioned, we have that daily, and then looking for the white box of this wave B. And you will also see that for the target area of this wave C, if I change the potential high of the box in wave B, like if it's at the low of the box, you can see that the 1-to-1 of wave C is still around the double bottom. And if I move it to the high of the box, you can see the 1.236, which is still a common target for wave C in a zigzag, is also still including this double bottom at 25.8k. So this is currently definitely a count that I am keeping my eye on, which then on the higher time frame could mean the following. So if we then have a zigzag after wave X, so what we're looking at is a W, 3-wave W, which is a zigzag ABC in a bigger W, followed by a wave X over here, where we already expected X to end around these highs over here, as well as the 0.5 fib. So that was very nice. This was a swing failure pattern trade, by the way, wicking above these highs over here, closing below for then a move towards the downside. Very nicely indeed. And if we then look at the potential wave Y that we're having, so wave Y over here, and then a WX looking for a 3-wave structure in a wave Y, I prefer wave Y to end at least after the 0.382 and preferably between at least the 0.618 and the 1-to-1 trend-based fib extension or fib time extension, sorry, taken from the beginning to the low of W to then the high of X. So what you're doing with this one over here, trend-based fib time, is you compare the time it took to develop wave W with the time it might take to develop wave Y. And wave W and wave Y do have a time relationship, so it's quite interesting to see what happens, because if this is a 5-wave structure and we are now already working on a 3-wave move towards the upside, then in this scenario you expect at least another 5-wave move to the downside. But this structure over here is so small, so short in time. Just look at this small structure over here compared to what we had as a wave A in the bigger W, right? This is very, very short in time. So what I would prefer is this to be a 5-wave move, 3 waves up, 5-wave move to the downside, where we then have that double bottom at 25.8k, but maybe this then only being the first structure. Now this ABC could end around the 382, absolutely fine, but the 382 compared to then the length of wave W is still a very small target in time for a potential wave Y. So what I would at least keep in mind is that if this is going to be potentially the low of then a zigzag structure, that we might get a potential 3-wave B and then another wave C to the downside. So then we have an expanding flat in an A, B, C, where taking the lows over here could be the low of then a potential wave A. And then if this is a 3-wave move to the upside, we could get a potential wave B, where we have an interesting target area around the golden pocket as well, between 28.9k and 29.2k, for then an impulsive structure to the downside, going to the downside to the target area for wave Y over here, where we also have yellow support and a blue support box over here towards the downside. So this could be quite interesting for potentially a wave Y scenario, just keeping in mind that if this move from the lows of A is going to be impulsive and it's not going to show a 3-wave structure but a 5-wave move towards the upside, like basically a straight line, then of course this wave B is going to become less likely and we might look for more upside. But of course the potential trading scenario at the low over here remains the same. So this is what I think very, very interesting. This is also my preferred scenario on the medium time frame as it stands. If we then go to my alternative medium time frame scenario, the low is already in and then an ABC zigzag structure, and we are looking for more upside. Previously, we had a potential 1-2-1-2 going on for then a bigger 3, but there were so many things that I didn't like about that count that it's now a unlikely scenario, so I don't even show it in the video anymore, and I put this one on the chart right now, which is a leading diagonal. So in this scenario, we then have a 3-wave in a wave 1, and the leading diagonal can be all 3 waves or a 5-3-5-3-5 scenario. But in this scenario, it's then a 3-wave structure in a wave 1. Then you expect a 3-wave structure in a wave 2, and wave 2 and wave 4 have to be a zigzag structure, which means a 5-3-5-wave move. But in this scenario, the low of then potentially like an ABC, so the low of wave C is not allowed to take the lows over here. This low of wave C has to be above the lows, because it's not allowed to take the origin of wave 1. So then you have an A, B, C ending somewhere here, maybe the 786 for example, for then eventually a move towards the upside again in 3 waves for then wave 3. If we then look at potential targets for wave 2, well, the most common targets in a leading diagonal for a wave 2 are between the golden pocket and the 886 over here. So that's very nice, currently bouncing here. However, this does not look like a 3-wave structure at the moment. It looks more like a 5-wave structure. So you still expect something like this to happen. So a deeper target around the 786 or the 886 can then be expected. And then we again have a little bit of a target box over here below price around the 786, which is between 26.3k and 26.2k, for then a move towards the upside. Important is that this wave 3 is not allowed to be longer than the length in price of wave 1. Currently, I estimated this potential wave 3 high with the low that we got here. So if we look for a wave 3, we take the trend-based fib extension from the low of 1 to the high of 1, to then, I currently put it on here, but actually you have to put it a little bit lower because you expect 3 waves, right? A little bit lower, but I now put it on the lows over here. And then this wave 3 is not allowed to go higher than 29.2k. This is the invalidation. Most common target for the wave 3 in the leading diagonal is between the 786 and the 886, which is above the high of wave 1. So this is then a wave 3, wave 4 should be a zigzag, and then we have eventually a wave 5. This is, as it stands, still an alternative scenario to me. And then another alternative scenario, which is more like a low time frame scenario, but I at least want to show you, is that over here we then have a 3-wave structure and an ABC. Now it's alternative for 2 reasons. Wave C extended to the 1.618, which is a rare target for a wave C. Pulled from the high of A to the low of A to the high of B, and also this wave C is incredibly long in time. It's 3.5 times longer than wave A, which is not something you really like to see. Usually wave C is longer than A, yes, but it's longer than the 1-to-1, maybe around the 1.618 or in between here, maybe the 2, but the 3.5 is very, very long in my opinion. But if this is potentially a 3-wave corrective structure to the lows, then yeah, if this is a 3-wave structure, then potentially you could take these highs already by moving to the upside. So not up and down, but potentially continuation to the upside, where either an impulsive structure or a 3-wave structure. This is then an expanding flat in a 3-3-5. But this is very alternative at the moment. My preferred scenario again is seeing some sort of an ABC structure morphing then into this medium time frame potential scenario that we've been looking at for a while now, and then potentially as an alternative this leading diagonal. So I hope this video was helpful or valuable to you. Please check out the most recent educational update I've done about the best trading indicator you can use in my opinion, which is the CVD. Thanks for watching and subscribing, and I will see you at the next one. Bye bye.